Hello guys, this is another follow-up of Facebook. I want just to show you something on the chart. At least you understand something. Now yesterday I did a video after the news of the earnings. They were very good news, but what did happen yesterday? Let's see here. Okay, so yesterday the market closed at $49.01. Okay, it closed, and you see a downtrend for 2 weeks. Okay, we have here an uptrend, and here then we have a downtrend for 2 weeks, and the stock doesn't go up, it go down because a lot of people they short it and some people they sell. So two actions here. Now yesterday $49.01. Now what did happen after the news? The price goes up to 55 to here. Okay, it goes so high, but then after a few hours before 8 o'clock p.m. when the exchanges stop working, it goes down until 48. Okay, 48, it means below 49 here for yesterday. Now for today it opens at $47.25. So from 48 it goes to 47, and then from 47 it goes to 52, which is $5. So those who buy at 49, for example, yesterday before the close, they can get this nearly like $3. And right now the stock from 52 it goes to 51.27. Okay, this is for today. Now why today it didn't happen like last time? Okay, you see last time here, yesterday it was like this. From 49 it goes to 55, but from 55 it goes to 48. Okay, so that's why you don't see a gap here. Here you see a gap because all goes good, and here you don't see a gap at all. Okay, this is trading, so there is nothing sure in the market. I'm just telling you things, and I always repeat in my videos, and some people think that they can make it, but if they lose money they must lose a lot because they don't understand how the market works. The market is volatile. It means that it can go up so high and it can go down on whatever price. The market is always right. It's you that it is wrong or right, but the market is always right. The price that you see each time is the right price because it's the majority of the traders. If the majority of the traders are optimistic and they buy a lot, the price will go up. Like you see here, a very large trend, and if some days they sell, and this is the price. Okay, so there is no what we call for me, I'm not speaking about the other analysts or fundamentals, or for me the price that you see is the correct price. Okay, don't say it's here you say it's cheaper. So we don't know. If we don't see this candlestick here, for me, for example, I bought here, but I would never buy in this, in the red. Why I don't buy in the red? Because I don't know what will happen tomorrow. Maybe from this it go down, but since it goes up, so I buy here. Now for yesterday it was an exception. I buy before the end of the day here. Okay, why I buy here? Because of the news. I was waiting for the news, and if I get a nice profit, I will sell. If it goes down, I will sell also. Okay, and today it opens very low and it goes up, so there is an opportunity to make money. So, but no one knows if the coming days it goes up until you have this. For example, I will tell you here, this is the resistance, which is 54.83. okay, so 54.83, this is the resistance, and let's say this is the support, which is, let's say, 45.26. Okay, now when you look at this, so let's change this. I always do it with blue in order to understand that this is the, okay, you can see here, I make it big in order to understand, to see it. Okay, okay, this is the resistance. It means the stock goes up here. An old resistance was here. Okay, I will make an old resistance here just to understand, which was 51.60. Okay, 51.60. Then it traded into a range. Then it goes down to $45.26, and then we have a trend until 54.83, and then you see here that 3 days, 1, 2, 3, it stops because the traders were scared to buy more, but there is no one, like a mutual fund or someone who is big, who is trying to buy. That's why no one buys, and they were scared. Maybe they buy for a little bit here and no one follows, and they lose a lot of money. So they were scared for 3 days, but the 4th day they understand that there is something going bad. Okay, and the stock is going down and down and down. This going down, there is no, don't try always to search for a reason why it goes down. Some big traders, some hedge funds, not mutual funds, hedge funds, they can short the stock. So when they short the stock, it goes so down. For example, from 54.83 cents, it goes to 46. Okay, so this is 8 points. So if they short this, they take 8 points from all these people who are here. So, and today is a good day because the trend has changed. Now, if this candlestick here is the same as this here or this here, let's say this one here or this one here, it could have a good effect. Now, if the price goes down again, okay, if it goes down, it's time to sell, because if it goes down to where it was and it reached this support level, it means that the people are still shorting the thing. Okay, but today is a very good day, and we will try to see tomorrow. Now I will give, that's why I told you before, if you are here, if you bought here these days here and the stock stops and it's going down, you must put a stop loss. Okay, let's take this, let's change it to red. Okay, if you put, for example, a stop loss here, let's see here, and you are trading, and the third day it goes beyond and it reaches your stop loss, you get out from the stock before it heads down for a lot of points down. Okay, and then you can buy it today. Okay, so you buy it cheaper. Now if you stay in the trade, you don't know what will happen. Don't trust the market. The market is doing what it's doing, either up or down. Don't trust it. So try to protect yourself with a stop loss. When a stop loss, for example, you put stop loss here, you get out and you watch. Okay, you watch the market. If you are following Facebook or another stock, either you do shorting, but for each day. Don't do it for days, because you don't know what will happen. If it happens with the news, something going into the market, and you don't know, you will lose a lot. So just get out and wait and wait till you see something good, and then you can buy again. I don't ask anyone to buy or to sell. So here I'm just explaining how the things are going to the market, how you protect yourself. Always when you trade, don't do blind trading or kamikaze trading. It means you put all your money into a day and you think that the market will follow you. The market doesn't follow anyone. The market is a collection of traders. They do what they want, they buy, they sell. But if the majority buys and they have too much money, the price goes up. If some big guys short the stock, and other people, other traders, professional, they follow and they short it again, the price will go down. This is trading. There is no other thing. You can see here, each day it goes up, trade in a range, go down, then it goes up, then it goes down. This is trading. This is how the market is. But in general, some people who are like investing or something, this is the opposite. Most of the time, the investors don't put full stop loss like this. Okay, some investors, they don't put stop loss at all because they know that the market fluctuations is always there, so they don't worry about this until they see that they lose too much money, like half of their money, and then they get out because it's enough. But since you are trading, you shouldn't do like investing, okay? Because the goal is different. An investor, he doesn't see the price for 1 week, for 1 day, or 1 week, or 1 month. He see the price year by year, okay? For example, 1 year is here, and the second year is here. For example, Facebook. Let's take the yearly thing. Now, Facebook, for example, he buys 42 and now it's 51, okay? So it's 9 points from here to here, and 9 points from 42, okay? It's nearly 20% or 22%. So 22% a year is too much for an investor. That's why what I told you before, that that an investor is looking for 10%, which all the mutual funds give in each year, okay, approximately. But if things go from 15%, 20%, 30%, it's a good thing. That's why the investors, they stay in a stock that give them more than 10%, which is the market. If you if the market is good, and you don't know, maybe this year is 51, maybe next year is 60 or 70 or 80. It depends on how the people react to some stocks. Some people, they buy and they never sell, because they believe in the long term. They are investing, they are not trading. So there is a big difference between trading and investing. So don't confuse yourself. Okay, so we go to the daily as usual. So this is in general for today, and we don't know what will happen. Today is a good day. Maybe if there is a trend, and tomorrow, after tomorrow, it continue the uptrend, and if it hits this resistance and goes up, it means that there is a new trend. It's like this here. It stops here. Okay, it stops here. This is what the old resistance is here. Now with this candlestick, it shows that there is a new trend, but it was a fake trend, because it goes here, it traded in the range, but it doesn't progress. It means there is something wrong. Some people, they buy a lot and they wait for other people to join, but here unfortunately no people joined, and no big hands joined this. That's why the stock goes down. Okay, so this is just to follow up to Facebook. Hope you understand trading, and with these lessons that I give, always try to preserve yourself. Don't do foolish things. Don't buy with all your money in one day, and then you can lose too much. Okay, and you tell me, oh, okay, we can win a big trade too, and say yes, but you can lose too. So you should think both ways. Are you okay to lose $7 or $8 for each share? If you say yes, you go with it. Okay, if you are sure, but don't cry later if things happen. Okay, and you say it's the market. No, it's not the market, it's you. And always have responsibility for what you are doing. Don't blame anyone, or blame the market, or blame the news, or blame anyone else. It's you who have done the trade. No one forced you to do a trade. It's you. Now when you begin to become responsible for your actions, and then you become a good trader. Okay, so thank you very much for watching. If you have any questions, just ask. Thank you.